Welcome to another Owner Finance, your way to freedom, one note at a time. Super excited to be with you guys today. It is yet another week, and just want to welcome everyone to the show. For those of you who may not know me, my name is Dan Diaz. I was born in Mexico City, raised in San Antonio, Texas. I began my real estate investing career in November of 2015. At the time, I knew nothing about real estate. I always consider myself a problem solver and a solution seeker, though. And in that pursuit, I got involved with real estate investing. First deal generated me over $80,000 in upfront profit and a $400 monthly spread. And guys, I was absolutely hooked moving forward. Now I mostly raise private capital to fund owner finance transactions. I teach seller financing as an acquisitions tool. And I do buy as much land, single-family homes, and other small commercial assets as I can get my grubby little hands on. I consider myself an owner finance fanatic. On a personal level, I love a good dry red wine, a stiff scotch, a cold beer, good company, international travel, a bloody red steak, and regular road trips. My wife and I have been married a little over 3 years, no kids. We currently have a red heeler for a pet. I hate him, he hates me, and we just love each other. Awesome, guys. Quick reminder, if you guys can let StreamYard have permission to share your information, that I'll know exactly who you are. Mr. Ray Pantak, good to have you on board as always. We've got a hey from a Facebook user. Dancito from another Facebook user. Loud and clear, San Antonio, Texas. From another Facebook user, we've got Sohail. Always taking care of our loans for you guys. And I do miss my international travel, Ray. Last big trip we did before COVID was South Africa. That was pretty cool. I got a couple friends over there. So anyways, super excited to have you guys on board. Do me a favor. If you let StreamYard know permission so that they can share your information, I do want to know where you guys are from, what's your market, and if you guys any specific help with any deals or questions, just go ahead and put them in the comments section and we'll go with them as much as we can. Facebook user, saludos. ¿De dónde? ¿Quién sabe? But good to have you. Oh, I think I lost everyone for a minute. Hola from San Antonio. Philadelphia, good to have you on board for sure. Mr. Kenneth O'Keefe. Why was this group created? I believe as the financial markets change, our ability to swim these tumultuous and uncertain seas will depend on our ability to negotiate leads, to privately source deals, and to be creative seller finance purchasers. Moving forward, acquiring sellers properties with seller financing will be paramount to growing our portfolio and yours as well. That is my belief. What can you expect to get out of this group? I've made a personal commitment to use this platform to share our experience, our tools, and our skills to help you sharpen your own creative financial acquisitions teeth. I want to make sharks out of you guys so that you can devour every opportunity out there. That is my goal and my aspiration, and that's the reason why I'm putting together some super awesome tools, guys. I had a meeting with my VP of Group Growth, Mr. Beskar, and we have some amazing things coming for you guys. Going to blow you guys away. Going to be lots of value driven, and all because you guys believe in seller financing, believe in the group, and are looking for its growth for sure. Manuel, DFW, good to have you on board. Houston, all of Texas and 5 other states. Ray, quit your lying. You buy like in 35 states, not just 5. I know that for a fact. What do I expect from you guys? I expect you guys to be sharks. Now, this is not just a buzzword. It's an acronym that to me identifies somebody who S, succeeds mercilessly. H, hates mediocrity. A, accepts no excuses. R, resolves to be action takers. K, kills their bad habits. And S, shares what they learn here. Get to know the group a little bit. We just recently surpassed the 3,850 mark, and I couldn't have done it without you guys. So if you guys find value in this group, guys find value in the content, And if you guys love the fact that it's free, please invite your real estate related friends, your wholesalers, rehabbers, buy and holders, anybody in your market that you want to share something of value with them. Please do that, because we are on the path to an explosive growth as we speak right now. You guys have heard it. It is my goal to get to 10,000 as quickly as I can. And by God as my witness, we will be there by the time the summer has arrived. But I cannot do that on my own. So what do you guys say? Let's start off with the questions that you guys presented to the group during the week. We're going to start off with Mr. Derek Williams. He says, I'm selling my second property with owner financing. It's one of my students. Super cool cat. The price is $209,000, and I have a buyer wanting to put $50,000 on a 50-year loan versus a 30-year. And I'm asking what kind of discounts I offer him on the interest rate for the shorter term. I originally told him 9% for 30 years. I know that conventional mortgages offer a discount on the rate for shorter terms. Any guidance on how you deal this to an owner finance buyer? A couple things you got to be aware of. First of all, you can do what the heck you want. That's why you're the lender. Don't be guided with what Wells Fargo or Bank of America or any other traditional lender does. You are the lender, and it is between you and the other party what you guys are going to do. Now, personally, a couple things that I would point out is, yes, although your yield will go up if you do a 15-year mortgage, the underwriting requirements for the ability to repay may not necessarily allow them to be able to qualify for a 15-year mortgage. The payment's going to go up. Even if the payment doesn't go up, their DTI certainly is going to go up, which is going to make the loan exponentially more dangerous and risky for you. Now, what I would say is I would explain all those things. I would simply do the math with them. If they want to pay it off in 15 years, I would simply tell them what the monthly payment needs to be in order for them to finish in 15 years. But I wouldn't necessarily set in stone a 15-year mortgage. In addition to that, I certainly would not give them any discounts. If anything, the loan becomes a little bit riskier from the perspective that the DTI is going to be higher. So anyways, that's kind of my thought process. At the end of the day, you're the owner financier. You are the bank. That's the reason you started this process. You're more than welcome to do as you please. Philip Garza, great content always. Let's be sharks. San Antonio here. Good to have you on board. Hope that answers your question, Mr. Derek. Mr. Mike Quintanilla, do you need an RMLO to owner finance mobile homes without land, either to an investor or to an owner occupant? My understanding of Dodd-Frank requires RMLOs if you are originating notes for owner-occupied residences. If you do 6 or more in a year, that is correct, but I'm not sure if that applies selling to investors. I know the answer to this question. The answer is yes. You absolutely want to grab an RMLO. However, I'm going to quote Reg Z in TILA. That is the Truth in Lending Act. A dwelling is defined as a residential structure that contains 1 to 2 4 units, whether or not that structure is attached to real property. Quote, this includes mobile, manufactured, modular, and container homes. If you use seller financing to sell mobile homes that are attached or not attached, you fall under the same rules as selling a site-built, stick-built house using seller financing. So, rules still apply, even if you're owner financing mobile homes. At the end of the day, it just makes sense. I mean, unless you're going to be keeping that deal forever, using an RMLO basically is the rubber stamp that they can afford the mortgage. If later on down the line, they're not able to afford the mortgage, they're going to be unhappy about it, unless you have a really, really great relationship with them. It is always super good to have those third-party documents, those third-party papers that say, hey, listen, I understand circumstances change, but I acted in good faith, and this is my proof when I went ahead and gave you this mortgage. So by all means, Mr. Mike, RMLO it. RMLO it. Ray Pantek, previous question. I would tell him sure, and let's make it a 30-year payment, and you just pay a 15-year payment and pay it a lot faster. Yeah, I would agree with you. I have no problem telling them, hey, listen, if you wanted to pay it off in 15 years, this is what the payment is, but I would underwrite it and originate it as a 30-year mortgage for sure. Because at the end of the day, you don't know what could happen to them. let's say 5 years down the line, situation changes and they're not able to make the higher 15-year mortgage payment. It's not going to be a hardship for them because their minimum payment is going to be less for sure. Fake book user. Seller wants to sell us their house, but it was foreclosed on last month. Boo. This specific state allows a 12-month redemption period. Have you ever had any experience with a redemption period after the house forecloses? The specific state is Kansas. Thank you for talking about the state. I hope you don't value me any less, but I only owner finance and operate and invest in the greatest country in the world, which is Texas. So I would not be able to get you an educated decision or opinion, actually, as to what could happen in Kansas. I'd recommend that you reach out to a few of the sharks in the group, including Ray Pantak and a few others that operate outside of Texas for your question. I don't know who you are. It just said Facebook user. It just said Facebook user. So anyways, do me a favor, though. Whoever just posted that question, let us know in the group and say, hey, I went ahead and did a little bit of research, and this is what I came up with. It looks like in Kansas, you can do this or you cannot do this. We can all grow together for sure. Leslie has a question. Where can I find private lenders? So I'm going to be a little sharky with this response. If you're looking for private lenders, you're not negotiating seller financing. I'm sorry. I'm just going to say it out there. Seller financing is the #1 greatest unlimited largest pool of private lenders in the world. So not that I'm not going to tell you where you can get private lenders, I will, but I really want to focus on the fact that if you're in this group, is because you're not going to depend on banks. It's because you're not going to depend on private lenders. It's because you're not going to depend on your own credit to secure a loan, but rather you're going to depend on the seller giving you financing. Now, regarding private lenders, I go in depth, much more in our masterminds. But here's a couple of sources for private lenders. One, you absolutely want to start with your friends and family, people who know you and trust you. That's the #1 source. Secondly, when you're talking to sellers about purchasing their home on terms, many times they will talk about the interest rate. As you guys know, I love buying, and many times I do buy 0% down, 0% interest. But the conversation of interest happens often. And that's a really great transition period to say, I'm sorry, are we talking about a loan? Do you have money to loan? I was just talking about buying your house or land or property on terms. That's all I was talking about. However, if you have money to loan, absolutely. I do buy valuable Texas real estate with private money from individuals, maybe like yourself, and I do pay a generous interest when it comes to that. I make sure that they get at least the same or maybe even more than what they're getting on their 401k. Do you have money you'd like to lend? Believe it or not, our first 2 private lenders came from individual sellers who we had that conversation with. One of them, a lady, had about $400,000. The other one, about $800,000. Those were our first 2 private lenders back in 2016. Where else can you find private lenders? Country clubs, high-end bars and steakhouses, and doctors' conferences. Those 3 sources are invaluable sources to identify yourself and to connect with individuals. My 30-second elevator speech is, I buy houses and I borrow money. Are you interested in talking about any of those 2 subjects? 9 out of 10 times, they're not going to be interested about selling houses because they don't have a need, but you'll be able to start a conversation about borrowing money. I buy houses and borrow money. That's what I do. Start having those conversations with people around you, but country clubs, high-end bars and steakhouses in your neighborhood. Before COVID, my wife and I, on Fridays, we'd like to go out on Fridays. We'd go to a local bar, high-end bar, steakhouse, Ruth's Chris Steakhouse, and we would just have one drink. I know I'm having 2 fingers, so maybe I had 2 drinks. But anyway, sometimes we had one drink. And really our goal was to connect with individuals around us. And our pitch was real simple. I buy houses and borrow money. Which of the 2 would you like to talk about? And that's how we connected with individuals. Private money lenders are not going to be online. I will tell you that. And if they say they're online, they're pitching you online, they're probably either hard money lenders or they're scam artists. So definitely, consider that. Ray Pantak says he would consider Kansas for sure. There you go. Oh, that was Cole Key. Oh, good. Good to know. I appreciate it, Ray. It says, it just says Facebook user, so I'm not sure why it didn't pop up. Private lenders are everywhere. Yes, that is 100% absolutely true. But these are conversations. It's literally like if you were to ask, where can I find motivated sellers? Well, they're kind of everywhere, but you do need to look for them. You need to start the conversations and open up the conversations. Doctors, attorneys, CPAs, high-end steakhouses, country clubs, pick up golf if you don't like golfing, if you don't know golfing. That's one thing to do for sure. Hope that points you in the right direction for sure. Mr. Tadeo, any advice on taking over payments of a mobile home subject to? Don't do it. That's my advice. So why is it relatively safe to buy a house subject to the existing financing? The answer is simple, because you actually take ownership of the property day one. The deed is transferred to your name, and you legally and rightfully own it. So therefore, you can legally and rightfully do whatever the heck you want with it. You can lease it, lease option it, rent it, own or finance it, sell it outright, Airbnb it, whatever you'd like. However, when it comes to mobile homes that are not affixed to land, that are still considered chattel loans, that's the fancy term for private property loans, chattel loans, the title is still in the lender's name. And you're not going to be able to take title when you come up with the contractual agreement to pay the mortgage on their behalf. So what's going to be happening is you're going to be paying the mortgage, but the title is going to be with the lender. And the lender, once the payments are done, 5, 10, 15, 20 years down the line, they're going to send the title to the person that is on the loan, which is going to be the original seller. Now, here's a question. Can you, in fact, trust the seller 5, 10, 15, 20 years down the line that they will do the right thing and call you when they get the title and let you know, hey, Mr. Subject to investor, I really appreciate all these little payments you've done for me. It's really helped my credit score. Thanks, Career Point. Here's the title for you. I don't know. Maybe you can trust him. I wouldn't. That's just the plain truth. Now, it goes further. You can't owner finance it because you don't own it. So all of a sudden, you're stuck with a mobile home that your only exit strategy is to rent it. So that brings us to the question, is it a good idea to rent mobile homes? No, I hate renting mobile homes. And I'll tell you why. It's a depreciating asset. It is high on maintenance. And you're dealing with lower quality tenants. I'll just say it like that. So depreciating asset, high maintenance asset, low quality tenants. I don't like to rent mobile homes. I'll rent the dirt under the mobile homes for sure, all day, every day, and twice on Sunday. But I don't rent mobile homes. I'll owner finance them if they're free and clear and I hold the title. But that's the kind of the situation that you're in. If you decide to take it subject to, you don't get the title. You can't owner finance it legally. I don't know if you can do contract for deed. I don't deal with contract for deeds. I don't know. You might not even be able to do that because you're going to set up a contract predicated upon you getting the title, which you can't really guarantee because you don't really have it. It's a mess. So you're stuck with renting as the option. And renting a mobile home is just a crappy option. Anyways, that's kind of my 2 cents on whether or not it's a good idea to take subject to a mobile home. I would say no for sure. Mr. Ray says, you would be shocked who has money, and you would think they never would. That is for sure. Dirty John has a question. How do you speak to the mortgage company on behalf of the seller in a sub-to deal to find out what the reinstatement fee is and payoff amount would be? There's 2 documents that great question, by the way, and I go into detail this in our mastermind, but there's two documents that you need to have. The first document is the authorization to release information. Now, the authorization to release information does exactly that. It doesn't need to be notarized. It's simply an authorization from the borrower to release information to a third party. The authorization to release information can be in the name of a person or it can be the name of a company. That's kind of it. The second piece of information, the second piece of document that you're going to need is going to be a power of attorney. Now, depending on your state, it'll be a little bit different exactly how it's going to be written. In Texas, I like to use durable power of attorney for real estate transactions. It specifies, it's not like an all-encompassing durable power of attorney, but it's specific for a real estate transaction that's got to do at this address. You have the legal address, and that'll say exactly what you're able to do in behalf of the borrower. Now, the way I like to introduce myself to the mortgage company, I'd like to introduce myself straight up. How you doing? Afternoon, Mr. Wells Fargo. My name is Dan Diaz. I'm currently working with Tomatoto Ventures and Acquisitions. That's our company name. Moving forward, the borrower has asked us to be servicing and managing their loan. Now, we want to get our paperwork set up for you guys. So we've got a authorization to release information, and we also have a power of attorney. Where can I fax or email or mail these to so that we can start managing the loan in their behalf? That's it. I present myself as the loan manager. I never say we bought this property subject to. That's retarded. Don't do that. I never say we now own their house. Don't say that. They don't need to know that. All they need to know is that moving forward, you are in fact authorized to manage their loan. And that really is in fact what you're doing. Hope that answers your question. Edgar Trigos, if a property I bought has a neighbor's house encroaching 8 inches, would I be able to sell it? Maybe. I would imagine that it's got to be disclosed, and you might have a little bit of problem with title insurance. So that might be the only issues. That would be a question that I would ask your title company and see what needs to happen there. I don't know if that was much help to you, but that's what I would do. Chevelle, conference call with seller online, authorizing lender to speak to you about their loan. I do it all the time with pre-foreclosures. Yes, Chevelle, that's a great point. You can, so if you're with the seller directly, many times the mortgage company will talk to you directly if they're there on the line. The pieces of paperwork were more for after that conversation. You want to have an ongoing conversation. Now, this is the fun part that nobody talks about, about subject twos. You cannot force the lender to talk to you. It's got to be a mutual agreement and an understanding that they will do it. So you have to learn to present yourself with confidence when it comes to mortgage companies. They're there to do a job. You're there to do a job. They are not better than you. You are not better than them. You are both working on the same team, which is to make sure that the mortgage performs. They're doing things on their end to make sure the mortgage performs. You're doing things on your end to make sure the mortgage performs. But you're both on the same team. Learn the lingo, learn the verbiage, be assertive when you're on the phone. Do not be pushy. You cannot force them to do anything, just like they cannot force you to do anything. Like I said, we normally present ourselves as simply, the entity or the person who moving forward is going to be managing the loan in behalf of Mr. Seller. And I just ask him, what do I need to do to make sure we have the paperwork in line with you guys? I already have an authorization to release information. I also already have a durable power of attorney. Where can I submit them? Do they have any paperwork that they want me to fill out that's specific to kind of them? What do I need to do to make sure this happens? That's really all there is. There is absolutely nothing in the deed of trust that says that they cannot have someone else manage their mortgage. Okay, I'm going to say that again. I've never seen a deed of trust. I could be wrong, but I've never seen a deed of trust that would prevent someone else from managing the mortgage. Guys, that's absolute gold for you guys. Certainly hope you guys enjoy it. Those are the questions that you guys posted for today. I certainly hope you guys enjoyed them. Couple of things, a couple of announcements for the group. One, I'm working on a much more comprehensive 10-hour owner finance, your way to freedom, 10-hour owner finance training. When that happens, it will cost more. It's going to be about maybe a 1 to 2 month time frame until that happens. So if you guys still want to take advantage of the $297 price, please hit me up as quickly as you can. That is still going to be available until I release the slightly more comprehensive 10-hour owner finance training. Second announcement, my VP of Group Growth, Mr. Scour, and myself are working on a phenomenal inner ambassador circle. I think he didn't want me to talk about it yet, but you know what? I'm going to give you guys the heads up. This is going to be a 6 to 8 week boot camp for individuals who are committed to their note growth, that are committed to purchasing with seller financing, and are committed to originating owner finance mortgages. The cost, y'all ready for it? It's going to be a lot. No, I'm kidding. It's there's a good chance that the first launch, it may be without financial cost, but it's going to be extremely limited to a small group of people, and there will be qualifications. So if you want to, maybe if you want, start hitting up Mr. Beskar, VP of Group Growth. Let him know that you would like to apply for the Inner Ambassador Circle. Like I said, this is going to be an 8-week intensive boot camp. Very limited seating, no cost financially, but it's only for individuals who are absolutely committed to their growth and to the growth of the group as well. Junior, I want their new release. I'll autograph it for you, man. We're working on it. It'll probably be about a month or two out, but it's going to be pretty fun for sure. So anyways, that's what I've got for you guys. Couple of homework pieces. When you talk to sellers, make it a habit. Make it an absolute habit. Listen, Mr. Seller, I'm not going to pretend like I know anything about you. I'm going to let you guide this conversation. If you have a property that you're no longer benefiting from, that is no longer being profitable to you, I'd like to know what I can do for you. Would you prefer to liquidate it quickly at a discount? Or would you like to hear how you can get full fair market value for the property and guaranteed monthly payments for the next 10, 15, 20 years? Which option sounds better to you today? I want you guys to do that as your homework. Start making offers like that. Let the seller guide the conversation, whether it's going to be a wholesale deal or whether it's going to be a term offer deal, and see where the conversation goes. I do not want to hear anybody in this group anymore say, I've got a quick close, all cash offer. Do you want to sell? I don't want to hear that anymore. I don't want to hear that you guys are doing that, because when you do that, you're kind of setting up the terms and you're no longer leaving the door open for a term offer. And to make matters worse, now you got to beat up the seller about the price, because that's the only way things are going to work. Don't do that. Do it like we do. Listen, Mr. Seller, question. Are you benefiting or profiting from this property today? The obvious answer is no. Well, if the answer is no, what would you like to do? Would you like to liquidate it quickly at a discount? Or would you like to hear how you can get a full fair market value and guaranteed monthly income for the next 10, 15, 20 years? What sounds better to you today? Facebook user, can you type the question? No, you can type it. Mr. Seller, does this property, 123 Main Street, is it currently benefiting you or profiting you today? Answer will always be no. No, it's not. It's vacant. It's overgrown. I'm getting city liens. Whatever. The AC just got stolen. Man, I'm sorry to hear that. Listen, I'm not going to pretend like I know what you need. I'd like you to tell me what you need. Would you like to hear about a way in which you can liquidate quickly for a discount? Or would you like to hear how you can get full fair market value and guaranteed monthly income for the next 10, 15, 20 years? Phrase it in a way in which the guaranteed monthly income for the next 10, 15, 20 years is a bonus to them. Not, hey, I'll give you full fair market value if you give me 10, 15 years. No, don't say if. And words mean things. And full fair market value and guaranteed monthly income for the next 10, 15, 20 years. And words mean things. Guys, it's been an absolute pleasure. I hope you guys have an awesome, awesome day. I want to see your questions. I want to see your deals. I want to see your offers. I want to see your struggles. I want to hear your challenges in the group. And if you guys find value, please, please, please do me a favor and invite those in your market to join. Nothing makes me happier than to see that. Hope you guys have a great one. We'll see you guys. Take care.